What if I told you that nearly everything you believe about money is wrong, and that if you learn just one thing, you could change your financial destiny forever? Good evening, ladies and gentlemen. Thank you for joining me today. I invite you to imagine not just surviving, but thriving, not just paying bills, but building generational wealth, not just working for money, but letting money work for you. Today, we will embark on a journey that begins not with assets or numbers, but with knowledge, mindset, and clarity. A journey into financial intelligence, your most powerful roadmap to riches. Because here's a blunt truth: money doesn't discriminate, but opportunity does. And the difference between those who prosper and those who struggle is rarely luck. More often, it's financial intelligence, the ability to understand how money works, how to make it work for you, and how to protect it from the traps of emotion, impulse, and ignorance. Over the next hour, I will show you why most people never become wealthy, even if they earn well or work hard. What financial intelligence really means, and why so few have it. The core principles and habits that can transform your financial life. Hard data and real-world examples that prove this model works. A concrete, step-by-step roadmap you can start applying today. Common mistakes and pitfalls, and how to avoid them. A long-term vision for wealth, not just for you, but for future generations. If you commit to understanding and practicing what I share, you may never see money the same way again. Because financial intelligence isn't about get rich quick. It's about get rich for good. Let's begin. Part 1. The problem: why most people never get rich. We live in a world where many people work tirelessly all their lives, yet never build real wealth. Billions earn a paycheck, but only a small fraction manage to save, invest, and grow money over time. Why? Because earning well is not the same as being financially intelligent. Income is only one half of the equation. The other half, perhaps more important, is how you manage and grow what you earn. Studies of wealth inequality show a stark reality. Over the last century, the wealth gap between the top 1% and the bottom 90% has widened dramatically. Part of this gap stems from the vastly different savings and investment behaviors among income groups. For example, in the U.S., historical data shows that while the bottom 90% saved on average about 3% of their income, the top groups saved significantly more, often in double digits. Were 2018. Wid. World +1. Thus, even with similar or modest incomes, the difference in long-term wealth often comes down to what you do with your money, not just how much you earn. Furthermore, most financial advice in popular culture emphasizes consumption: a new car, a bigger house, a nicer lifestyle. But that mindset, consumption first, rarely leads to lasting wealth. Instead, it leads to a cycle of paycheck to paycheck living, constant stress, and lost potential. If you never learn how to make money work for you, you may work your entire life, and at the end, have little to show for it. Part 2. What is financial intelligence, and why it matters? So what is financial intelligence? At its core, financial intelligence is the understanding and skill to manage, protect, and grow your resources over time. It is not a one-time lesson or a shortcut, it's a lifelong mindset. It involves knowing how to preserve your capital, making informed investments rather than speculative bets, understanding risk, return, diversification, and compounding, building habits that favor long-term prosperity over short-term gratification, understanding basic accounting, financial statements, and real value, not hype. Legendary investor Warren Buffett, widely regarded as one of the most successful investors in history, once said, "Rule number 1, never lose money. Rule number 2, don't forget rule number 1. Bao din tu dan tri plus 1. Simple words, but deeply wise. The first priority of financial intelligence isn't to chase quick gains, but to protect what you have. Buffett also emphasized always saving before spending. As he said, "Don't save what is left after spending, spend what is left after saving." Thoi bao nan hang plus 1. That mindset, save first, then spend, separates the poor from the wealthy over decades. Financial intelligence is not about greed. It is about control, clarity, and security. It means giving yourself the freedom to respond to life's twists and turns without financial panic. It means building assets, not liabilities. Part 3. Core Principles of Financial Intelligence. Before diving into data and practical steps, let's outline the core principles that define financial intelligence, the foundation stones of lasting wealth. 3.1. Protect capital first, risk management over speculation. As Buffett warned, prioritizing safety of capital is more important than chasing high returns. Speculation may yield quick gains, but it also brings high risk of loss. 3.2. Invest in knowledge, financial education as your first asset. Knowledge is perhaps your greatest asset. As Robert Kiyosaki often says, financial freedom is available to those who learn about it and work for it. VOH. Understanding accounting, balance sheets, interest rates, inflation, and basic economics gives you the tools to make intelligent financial decisions. 3.3. Long-term thinking, patience, discipline and compounding. Wealth rarely comes overnight. It accumulates over time through disciplined saving, investing, and letting returns compound. Buffett uses the metaphor, people who sit under the shade today are those who planted the tree long ago. Bao Dien Tu Dan Tri Plus 1. 3.4. Diversification and multiple income streams. Don't rely on a single source. Relying on a single source of income is risky. Diversifying, across savings, investments, real assets, businesses, protects you against volatility. As many financial thinkers note, avoid putting all your eggs in one basket. The Koth Plus 1. 3.5. Behavior and emotional control. Stay rational, not reactive. Emotions like fear and greed are the enemies of rational investing. Legendary investors succeed not because they are lucky, but because they act with discipline and logic. Buffett cautions against following the crowd. Be fearful when others are greedy, and greedy when others are fearful. Bao Dien Tu Dan Tri Plus 1. At this point we have laid the foundation, defined what financial intelligence is, why it matters, and the key principles that underlie it. Part 4. Evidence, data and real-world examples. To make the ideas concrete, let's look at cold, hard evidence. Let's look at data. Because financial intelligence isn't about hope or hype, it's about measurable results. Proven by numbers, history, and real human lives. 4.1. The wealth gap, a stark reality. Across many developed economies, the gap between the wealthy and the rest has grown markedly over decades. For example, in the United States, often considered the world's largest free market economy, wealth inequality remains extreme. A large portion of national wealth is held by a small fraction of households. While data fluctuates by year and methodology, estimates repeatedly show that the top 1% or 5% hold a disproportionately large share of total wealth, leaving the vast majority with far smaller stakes. This disparity is not just because they earn more. Many people with decent income still struggle financially because they lack the financial intelligence to save, invest, and grow their capital over time. In contrast, households that understand money, that save, invest, diversify, have historically built lasting wealth. That is why even across income levels, there remains a gap in net worth accumulation between those who treat money as a resource and those who treat it as a spending tool. 4.2. The power of compounding and long-term investing. Consider this simple truth. Money invested wisely and left alone can grow exponentially, thanks to compound interest, reinvested dividends, capital appreciation, and time. This is why many of the world's wealthy did not get rich quick. They chose to invest wisely, be patient, and let compounding work for them. Legendary investors have always emphasized this principle. For example, Warren Buffett famously said, "The stock market is a device for transferring money from the impatient to the patient." This idea exemplifies why financial intelligence isn't about excitement or speculation. It's about patience, discipline, and giving time a chance to multiply value. If you start investing early, With reasonable regularity, even modest amounts can grow into substantial wealth over decades. 4.3 Real-world success stories and historical patterns. Let's take real examples. Individuals and families who followed principles of financial intelligence, saved conscientiously, invested in diversified assets, avoided excessive debt, and thus built enduring wealth, even across economic downturns. Many families across the world, the silent rich, are not flashy. They don't talk about their wealth. They don't flaunt status. They quietly invest, keep costs low, and think long-term, over generations. This produces far more reliable prosperity than high-risk speculation. Moreover, across financial history, markets have always recovered from crises, though not without pain. Those who panic sold during downturns often lost large sums. Those who held their positions, or continued investing, often saw recovery and growth. This is not mere luck. It is financial intelligence in action. Part 5, Mindset and Behavior. What distinguishes the wealthy? Having seen evidence and examples, now let's dive into mindset, the inner game of money. Because your behavior, your habits, your discipline, your values, ultimately determines whether knowledge turns into wealth, or just wasted potential. 5.1 Save first. Spend later. One of the most powerful habits of financially intelligent people is this: they save first, then spend. Instead of waiting to see how much money is left at month's end, they set aside savings, consistently, before touching what's left. This simple habit flips the typical script of earn right pointing arrow, spend right pointing arrow, save if anything left, into earn right pointing arrow, save right pointing arrow, spend. This habit creates two massive advantages. It forces discipline. Saving becomes non-negotiable, not optional. It ensures your money has a chance to grow, rather than disappear in consumption. Legendary financial educators, like Robert Kiyosaki, have long stressed that true wealth begins not with high income, but with financial discipline and intelligent money management. 5.2 Avoid debt that doesn't create value. Another critical behavioral principle: avoid debt, or at least avoid bad debt. Debt used for consumption, a luxury car, expensive gadgets, lavish vacations beyond means, rarely builds wealth. In many cases, it destroys it. On the other hand, debt used strategically, for education, skill building, productive investment, business, can be a tool. Financially intelligent people treat debt carefully. They recognize that paying interest and fees can erode financial gains as quickly as reckless spending. 5.3 Think long-term, not instant gratification. One of the biggest enemies of financial success is impatience. The desire for instant gratification, the urge to buy the new iPhone, upgrade the car, renovate the house, travel now, often undermines long-term goals. Meanwhile, people who build lasting wealth cultivate patience, discipline, and delayed gratification. They understand that compound growth, time diversification, and economic cycles reward consistency more than spurts of spending or speculative chasing. 5.4 Learn continuously and adapt. The financial landscape changes, economies, technology, taxation, regulation, markets shift. What worked 20 years ago may not work today. So financial intelligence also means ongoing education, reading, learning, analyzing, being curious about finance, economics, personal money habits. It means adapting, adjusting portfolio, rebalancing assets, embracing new opportunities, while staying grounded in sound principles. Part 6, A Practical Roadmap, Steps to Build Financial Intelligence. Now, having defined what financial intelligence is, backed it with evidence, and understood the mindset, it's time to map out a practical, step-by-step roadmap. If you follow these steps, with discipline and consistency, you lay the foundation for wealth. Step 1. Build a strong financial base, save, budget, eliminate bad debt. Start by tracking every dime, dollar you earn and spend. Know precisely where money goes. Create a budget that allocates a portion, e.g. 20 to 30% of income to savings and investment, before any spending. Use pay yourself first rule treat savings, investments as non-negotiable expense. If you have high-interest consumer debt, credit cards, personal loans for consumption, prioritize paying them off. Because compound interest works both ways, for gains and losses. Step 2. Build an emergency fund and preserve capital. Before investing, build a safety cushion. At least 3 to 6 months of living expenses in a liquid, safe account or asset. Why? Because life is unpredictable. Health issues, job loss, emergencies, they happen. Without a safety net, even good plans can collapse. Protecting capital is the first principle of financial intelligence. Step 3. Educate yourself. Financial literacy is the first asset. Invest time, not just money, into understanding. Basics of savings, interest, inflation, investment fundamentals, stocks, bonds, real estate, businesses, risk versus return, diversification, compounding, how taxes, fees, inflation erode returns, behavioral biases in finance, fear, greed, herd mentality. Read books, reliable articles, follow trusted financial educators, study history of markets, learn from real data. Step 4. Start investing. No amount is too small. Many fear that investment requires large capital. Not true. Starting small is better than not starting at all. With compounding and time, small consistent investments can grow substantially. The key is consistency over size. Choose diversified, low-cost assets if you're a beginner. Avoid speculative bets until you understand risks. Step 5. Diversify. Don't put all eggs in one basket. Use a balanced portfolio. Combine safe assets, bonds, savings, cash, growth assets, equities, real estate, business, alternative assets, if you understand, commodities, maybe small business, innovation, long-term investments plus short, medium-term liquidity. Diversification spreads risk, ensures one market crash doesn't wipe out everything. Step 6. Monitor behavior. Emotions are the enemy. Track performance, but don't obsess. Avoid panic selling in downturns. Avoid FOMO in hype. Set long-term goals. Review periodically. Adjust, but avoid reacting emotionally. Step 7. Reinvest, compound, and let time work. Reinvest dividends, interest, returns. Let gains generate more gains. Remember, real wealth builds slowly, steadily, and quietly. Step 8. Protect wealth, insurance, estate planning, generational mindset. As wealth grows, protect it. Insurance for health, assets, legal measures, estate planning. Think long-term, not just for yourself, but for family, future generations. Part 7. Risks, mistakes, and how to avoid them. In our journey through financial intelligence, we must confront a sobering truth. Most financial failures do not come from lack of opportunity, but from preventable mistakes. Mistakes that come from fear, poor judgment, impatience, greed, or simply a lack of awareness. Let us walk through the most common pitfalls, so you can avoid them before they sabotage your financial future. 7.1. The trap of lifestyle inflation. One of the greatest enemies of wealth is lifestyle inflation, the tendency for expenses to rise as income rises. You get a raise right-pointing arrow, you buy a nicer phone. A bonus right-pointing arrow, you upgrade your car. A promotion right-pointing arrow, a bigger apartment. This pattern is so seductive that it silently destroys long-term wealth. Financially intelligent people reverse this pattern. Income increases right-pointing arrow savings and investments increase right-pointing arrow lifestyle improves later. Sustainably. They understand that wealth is built in silence long before it appears in lifestyle. 7.2. Emotional investing, fear, greed, overconfidence. Markets don't destroy wealth, emotions do. Fear says, sell everything. The world is ending. Greed says, buy more. It will go up forever. Overconfidence whispers, this time, I can't lose. These emotions are ancient, evolutionary instincts, but they have no place in modern financial decision-making. In fact, Daniel Kahneman, Nobel Prize winner and author of Thinking Fast and Slow, showed that human brains consistently make irrational financial decisions due to cognitive biases. We must learn to recognize these biases and rise above them. The financially intelligent do not react. They respond, with reason, discipline, and strategy. 7.3 Ignoring fees, inflation, and opportunity cost. Millions of people lose wealth not because they invested poorly, but because they forgot the silent killers. High fees quietly eat your returns. Inflation decreases the real value of your savings. Opportunity cost punishes those who wait too long to invest. Warren Buffett once warned, "The investor of today does not profit from yesterday's growth." Meaning, if you do nothing, your money slowly dies. 7.4 Overleveraging, debt that destroys. Debt is not evil. But misused debt is a financial grenade. Overleveraging, borrowing too much, too fast, without a long-term plan, has brought down families, businesses, and even entire nations. Financial intelligence means distinguishing between good debt, creates income or value. Bad debt, creates liabilities, stress, and risk. The wealthy don't fear debt, they control it. 7.5 Chasing trends without understanding. Crypto, NFTs, tech booms, meme stocks. Every generation has its gold rush. But financial intelligence teaches us, never invest in something you don't understand. A trend can be profitable, but only if rooted in knowledge, not hype. Part 8 The Long Game, Wealth as a Multi-Generational Journey. Now we arrive at one of the most important sections. Wealth is not just about you. It is about generations. Financial intelligence is a legacy, a seed that grows beyond your lifetime. 8.1 The Mindset of Legacy Builders. People who build generational wealth think differently. They ask different questions. How can I create value that lasts? What habits do I want my children to inherit? What systems can I build that continue after I'm gone? They see money not as a trophy, but as a tool of empowerment. 8.2 Family Wealth versus Family Consumption. Many families fall into a repeating pattern. One generation works hard right-pointing arrow. Next generation spends freely right-pointing arrow. Wealth disappears. This cycle is so common it has a name. Shirt sleeves to shirt sleeves in 3 generations. Why does this happen? Because wealth was passed down. But financial intelligence was not. If you want your children to inherit wealth, first ensure they inherit wisdom. 8.3 Systems that preserve wealth. Financial intelligence at the generational level includes proper insurance, asset protection, trusts and wills, diversified investments, a culture of financial education, a family vision that outlives any one member. This is what transforms money into a legacy. Part 9 The Roadmap to Riches, a complete system. We've covered principles, evidence, psychology, and pitfalls. Now we unify everything into a complete, actionable system, a roadmap you can apply starting today. 9.1 Stage 1 Foundation, 0 to 2 years. You establish the basics. Budget. Emergency fund. Clear debt strategy. Basic financial literacy. Early habit formation. At this stage, your focus is stability. 9.2 Stage 2 Growth, 2 to 10 years. You begin building assets. Regular investing. Low-cost index funds or diversified portfolios. Increasing savings rate annually. Controlled lifestyle. Your focus is consistency and compounding. 9.3 Stage 3 Expansion, 10 to 20 years. You diversify further. Real estate. Business ownership. Multiple income streams. Tax optimization. Asset protection. Your focus is scale and systemization. 9.4 Stage 4 Legacy, 20 plus years. You build generational structures. Trusts. Long-term philanthropy. Family governance. Succession planning. Your focus is impact beyond your lifetime. Part 10, Conclusion and Call to Action. Ladies and gentlemen, financial intelligence is not a mystery. It is not a privilege. It is a skill, a mindset, a decision. A decision to rise above fear. A decision to think long-term. A decision to embrace discipline. A decision to build a life where money serves you, not the other way around. And above all, a decision to begin today. Because the greatest regret of those who fail financially is not losing money. It is losing time, the one asset they can never get back. So I ask you, when will you begin your journey to financial intelligence? When will you plant the seed that your future self will thank you for? Not tomorrow. Not next month. Today, right now. The roadmap is here. The principles are timeless. The choice is yours. Financial intelligence, your roadmap to riches, begins with one simple step. Take control of your financial life today.